Gold or Bitcoin? Which one, if any, is going to be the best safe haven for our money if we really do have a recession? Grab a drink, take a seat, let's talk about it. What's up, y'all? It's Brian. I am measuring gold and Bitcoin in 3 key categories: protection against the stock market crash, protection against inflation, and protection against the US dollar weakening. Why these 3? Well, we are seeing the beginning of all 3 right now as a result of Trump's Liberation Day tariffs. Stocks are crashing, tariffs will be inflationary, at least in the short term, and the US dollar has tumbled compared to other major currencies. If we continue on this trajectory, and that is a big if, I certainly can't see the future, but if we do, I want to be ready. So the first thing I want to look at is, how does gold and Bitcoin do when the US dollar is weakening? My intuition tells me that gold would do just fine when the US dollar is weakening, because the US isn't the only country that uses gold. Every country is going to use gold for certain manufacturing purposes, mainly for jewelry, but it also is a store of value that a lot of countries will hold a reserve of gold. So my intuition would be that gold would do just fine, but as always, I like to check historical data. What has happened in the past, I think that's going to give me the best chance of correctly predicting how it's going to operate in the future. This graph here shows gold and the US dollar index compared to each other over the last 50 years. As gold rises, I would expect to see the dollar to drop. And then as the dollar rises, I would expect to see gold drop. And that is exactly what I see. If I take any point on this graph, I can see an inverse correlation between the two. In 77, the green line is the dollar, it is dropping. If I go to the corresponding gold line, it is rising. The US dollar does appear to be a little more volatile in some areas, whereas gold appears to be a little bit more volatile, but the trend is still the same. If I look at this point right here, the US dollar is rising, and similarly gold is dropping. And then right at the turning point, they both reverse direction at the same time. The US dollar drops as gold rises. The same is true when we zoom in and just look at the more recent time period right here. This is over the last 15 years. Once again, we can see at the very beginning, the US dollar drops as gold rises. Over here, we can see gold dropping where the dollar is rising. Gold will be a decent hedge against the US dollar weakening, but let's see if Bitcoin does a better job. This graph compares Bitcoin and the US dollar index once again, and I see a loose correlation between the two, a negative correlation. As the red US dollar drops, the blue Bitcoin rises, and that does appear to be consistent across the last 15 years. One thing to note about this graph is that Bitcoin is on a logarithmic scale and gold is on a linear scale. And they do this because Bitcoin over the last 15 years has increased thousands of %. So you wouldn't even be able to see the two on the same graph together. So the way they account for that is every tick mark you go up on Bitcoin, you are 10xing the value. So Bitcoin has appreciated way more over the last 15 years than gold in the short term, because Bitcoin is just so volatile. There are some sections where gold is going down and Bitcoin is going down at the same time. For instance, right here in 2013, we can see both are trending down at the same time. But on the whole, there is a negative correlation between Bitcoin and the US dollar. However, it appears to be a little bit weaker than gold. Because of the extreme volatility, I don't know that Bitcoin would be my tool of choice to give me a hedge against the US dollar, because it's all over the place. Bitcoin swings by 50% up or down. It's hard to say what direction it's going to go. It seems to me as more of a high risk, high reward asset than something that I would use to specifically target protection against the US dollar weakening. So round 1 for me goes to gold over Bitcoin. But now let's see how these two assets react to rising inflation. This graph here shows the US inflation rate since 2016. And in recent memory, the last time inflation really spiked was in 2022. But we can look here at the price of gold at the beginning of 2022 through the middle of 2022, the price of gold spiked at the same time. The inflation spiking and then inflation goes back down. It shows that gold is also going back down at this time. So gold and inflation have a positive correlation, which is what we want in an asset that's going to protect us from inflation. However, when I pull up Bitcoin, Bitcoin is dropping off a cliff starting in late 2021 through 2022, and it doesn't really start to turn around until 2023. And surprise, surprise, whenever I look at inflation, that's about when inflation starts to level off. So in my mind, Bitcoin seems to be negatively correlated to inflation. If inflation is going down, the price of Bitcoin is going up, or it's relatively uncorrelated in that regard. However, when inflation goes up, in recent memory, the only example we really have is Bitcoin crashing. So if I'm thinking about Bitcoin as a protection against inflation, I do not think that's going to work, at least in the short term. In the long term, that's a different story. In the long term, Bitcoin has gone up way more than inflation. So that's another way to look at it. Is my asset going to appreciate in the long term more than inflation? Bitcoin has done that 100%. So long term, Bitcoin appears to be great when we're looking historically. But in the short term, I wouldn't expect to be able to make any good short-term plays to benefit off of rising inflation using Bitcoin. Finally, and most importantly to me, I want to evaluate these two assets against the stock market. Are there any major correlations when we have a stock market crash? And then how does this imply what I should do in the short term and in the long term? I'm going to be looking at two different courses of action. So the first graph I'm pulling up here compares gold and the stock market over the last 100 years. Now I'm going to keep this analysis to the last 20 years because Bitcoin hasn't been around that long. And there has been three major crashes in the last 20 years. We have the dot-com bubble in the year 2000. So that's going to be the first period of time that I zoom in on. And we can see here this gray band, this is the recession period. Starting just before the recession, we have the gold line representing gold and the blue line representing the Dow Jones. The Dow Jones is starting to trend down from 2001 all the way until 2003. And during that same time period, gold is clearly trending up. So in this first time period, gold does seem to inverse the stock market and provide good short-term returns and medium-term returns when the stock market is crashing. The next major crash was in 2008. Once again, just before the crash, we see gold and the Dow Jones right in line with each other. And then as the Dow Jones crashes, gold is going up. And then coming out of the recession, gold continues to go up while the Dow Jones goes up as well. But during the crash, we see gold performing well and the Dow Jones performing poorly, which is what I want to see for a short-term to medium-term play. Finally, let's look at the COVID crash, which was very brief, but this happened in 2020, 2021. And once again, the story repeats itself right here. Just before the COVID crash, gold and the Dow Jones were right in line. The Dow Jones crashes and gold goes up. Now, the Dow Jones did very quickly recover, and we can see that they're both going up together, and then they converge again in 2021. So for me, it looks like gold, it seems to be pretty reliable in the short term when there's a lot of fear in the market and that stocks are starting to go down. People run to gold and the price of gold goes up in the short term. But the long term might be a different story. To get an idea about gold long-term performance, I'm going to go back in time, which I have this luxury with gold, but not necessarily with Bitcoin. If I go back to 1978, where we had two major recessions back to back, if you invested in gold before these recessions, we can see by this graph, gold outperformed the stock market like crazy all the way up to, 1987. So this is over a 10-year period where if you invested in gold before the crashes, you did great. However, if I slide this date bar here to investing just after this second recession, the story changes quite a bit. In fact, if you started investing between the two recessions, if you invested before the second recession, but after the first recession, then the stock market did much better in the long term. And the reason for this is once there's a lot of fear in the market, gold gets pushed up incredibly fast. So you get those short-term gains, but then in the long term, gold tends to suffer quite a bit. So now when I look at our current situation, I see gold drastically outpacing the stock market. But my question is it too late? Are we at the point now to where if I invest in gold and I hold it for a long period of time, am I going to get much worse returns than the stock market? And the answer to that is, I don't know. What I do know is that gold tends to perform well in the short term when we have a market crash. So if I'm going to use gold for this purpose, it's only going to be short-term holdings. Now, is that going to be the same case with Bitcoin? This graph here shows the S&P 500 compared to Bitcoin. The S&P 500 is in red. Bitcoin is in blue. In this case, I'm going to start with the most recent and then go back in time and see how has Bitcoin reacted to market crashes in the past, as far back as we can go. Recently, we can see in red, the stock market is starting to crash, and in blue, Bitcoin is also going down. So That doesn't look good yet, but now let's check 2022, where we had a little bit of a correction. In November of 2021, Bitcoin is at a relative peak, and so is the stock market. And then as I scroll forward in time through 2022, I can see Bitcoin is trending down. I can see the stock market is trending down. And the question is, when does that reverse? Seems like we hit our bottom in the stock market and we hit our bottom in Bitcoin a little bit later, and then both seem to go up together. Okay, now let's check 2000, when we had the COVID crash. And once again, it looks like we're seeing the same thing. In February of 2020, we see the stock market crash and Bitcoin is crashing with it. So in the short term, it's really the opposite of gold. I do not want to be in Bitcoin when the market is crashing. Right now, Bitcoin seems to be somewhat of a leveraged version of the S&P 500. It's a very risky asset, and risky assets tend to get sold off when there is a lot of fear in the market. So if the S&P is going down, the Bitcoin is probably going to go down 2 or 3 times as much. In the long term, of course, we see a little bit of a different story. I can't even look at these two on the same graph if I'm looking at more than a period of 6 months, because Bitcoin has just been so much more volatile and it has outperformed the S&P 500 by so much. So in my mind, Bitcoin is the exact opposite as gold. It performs very, very well in the long term, historically speaking. In the short term, it is not good at all as a hedge against a stock market crash. So Bitcoin and gold can be in my portfolio at the same time because they both seem to occupy 2 completely different roles. I wouldn't say that one is better than the other. However, for a short-term play on the stock market going down, gold takes the cake over Bitcoin. Bitcoin has historically dropped big time whenever inflation is high and whenever the stock market crashes. The only time Bitcoin has done well along with gold is when the US dollar has weakened. Now, I have already started investing in gold, but not in the way that you would think. Check out this video right here to see how I am taking advantage of the short-term growth of gold while the stock market is crashing. Cheers. Oh, man, that's good. You know, if the stock market keeps crashing, I wonder if whiskey would be a good investment. People are going to be drinking their sorrows away. Maybe I should look into whiskey investments.